Assalamu alaikum friends, welcome to my channel. So today's standard is IFRS 5. Okay, this is a short standard, not much is there, it's not lengthy standard, but it's very important standard because this standard keeps on coming. Okay, so the standard is IFRS 5. It deals with two things. One is non-current assets held for sale and the other one is discontinued operations. So here we are going to cover the definitions mostly and also how you present in the financial statements. Okay, so first let us start with the definitions. IFRS 5 defines discontinued operation. I've highlighted there for you. Discontinued operation is a component of an entity that has been sold. Okay, so how do you say a component has been, an entity has discontinued an operation? When you sold sell off that part or that division or that branch, okay, a component of an entity you have sold off, that you can define as a discontinued operation, or which is classified as held for sale. If something is classified as held for sale, that also you can define as discontinued operations. So what is classified held for sale? How can you say when something has been classified as held for sale or not? Three things, three conditions are required. Number one, a separate line of business. It should be a separate line of business for you to say that it is a discontinued operation. Okay, and you need to remember all those three bullet points. Okay, do highlight, do whatever you can, but you need to remember the three bullet points. A separate line of business, it should be a separate line of business either in terms of operations or location. So if you see the case study, they will give you something related to their location or their operation. They will give you something like this, that is to identify that this is a discontinued operation or not. Second, part of a plan to dispose of a separate line of business or a subsidiary acquired solely for the purpose of resale. You have acquired the subsidiary in order to sell it in the future, okay, not to keep it for the long term. Next, an operation is held for sale if its carrying amount will not be recovered principally by continuing use. Why do you held for sale? If you think that selling is better than keeping it, right? You cannot recover by keeping it, by continuing use, so you sell it. Okay, so to be classified as held for sale and therefore to be a discontinued operation, at the reporting date you must meet the following criteria. This criteria you need to memorize it. You need to memorize it. Understand, but it needs to be there. Okay, because it comes. Okay, 9 out of 10 times this standard is there in the exam. So 1, 2, 3, 4, 5, 6 criteria are there. Make sure that you know all the 6 criteria. What are the 6 criteria? One by one, let me list it down. Operation is available for sale immediately in its current condition. Okay, it should not be something that you have to repair or make it. You cannot sell it in the current condition, then it's not. Okay, that means that condition is good enough that if today I want to sell it, I can sell it. So in the current condition, okay, no repairing, no mending, nothing. So operation is available for sale immediately in its current position. Number two, sale is highly probable and it is expected to be complete within 1 year. That means within 12 months. It should not exceed 12 months. Within that month, and the sale is very probable. Okay, they will say you in the case study whether the sale is highly probable or not, whether it's likely, unlikely. Management is committed to the sale. You can see whether management is committed to the sale or not. What are the actions they are taking? Are they taking any actions, or they just told they are going to sell and they are sitting back and doing nothing? Okay. Fourth, operation is being actively marketed. You are actively trying to find buyers because you want to sell it, no? Fourth, operation is being offered for a sale at a reasonable price in relation to its current fair value. Definitely, when you want to sell it, it will be below the fair value, not so much, but it's a reasonable price. Okay. And it is unlikely that the plan will change or be withdrawn. It's unlikely. That means you are committed to sell. You are planning to sell and you will sell it. It should not be that you want to sell. You are planning to sell, everything was done, and later you are like, no, you don't want to sell. You cannot change the plan. Okay, it's not withdrawn. Unlikely that plan will be changed. So all the 6 criteria needs to be met for it to be a discontinued operation or held for sale. Okay. So these are just the definition we were going through. Now let us go to the presentation part. IFRS 5 requires information about discontinued operation to be presented in the financial statements. How does it want you to present? It's not the way you want, it's how they want you to present. So, okay, so 1, 2, 3, 4. Okay, there are 4 things and we have the example also. A demo has been there, how it looks like. Before going there, let us read. Number 1, a single amount should be presented on the face of the statement of profit and loss or other comprehensive income that is compromised of. Okay, that should come definitely in the statement of profit and other comprehensive income. So what is it? The total of the post-tax profit or loss of discontinued operation. Okay. Next, post-tax. Okay, after tax, the profit or loss of discontinued operation should be shown on the face of it. Next, post-tax gain or loss on the measurement to the fair value, less cost to sell or the dispose of the discontinued operation. Okay. Second, an analysis of the single amount described above should be provided on the face of statement of profit or loss and other comprehensive income or in the notes to the financial statements. Now, what does the second point mean? The second point means that either you can show it on the face of the statement of profit or loss and other comprehensive income, or you can write it as a note to the financial statements. We have done a question, I think, I don't remember in the revision kit, I think it's question 9 or 10, because just now recently I have done that question, I have uploaded. You can check on my YouTube channel. I don't remember the question number, I think 9 or 10. One of the two questions where we had this discontinued operation. I think it's question number 10. Okay. So just go and check question number 10. There we have this part, and there they showed on the face of the financial statements. Not on the face of the financial statements, but they showed it as a note, as a separate note, how the breakdown of it. Okay. See, when you're making on the statement of profit and loss and other comprehensive income, that profit amount from discontinued operation, you are showing as a single amount. But how you got that profit or loss? There may be many steps. That is up to you. You can either write it as a note or in the space of the financial statements, you can show it. Okay. If you can go through question 10 of the revision kit to see the Kaplan revision book, the latest revision kit. Okay. I think the name of the company is Weston. Yeah, Weston. Third, if a decision to sell an operation is taken after the year end but before the accounts are approved, this is a non-adjusting event after the reporting date and disclosed in the notes. What is it? If a decision is to sell an operation is taken after the year end, you are taking you have the reporting year end, right? After that year end, let's say your year end is 31st December. So after your first Jan of the next year, you are deciding that you want to sell an operation. What should you do in this condition? Because it is not in the current year, it's falling in the next year. Before the accounts are approved, but before the accounts are approved. So this is a non-adjusting event. Okay, non-adjusting event means you don't adjust it after the reporting and disclose in the notes. Okay, it is disclosed in the notes. It's not a non-adjusting event, but you disclose it in the notes. Okay. This operation does not qualify as a discontinued operation at the reporting date, and separate presentation is not appropriate. So separate presentation is only appropriate, remember, if it's a discontinued operation, otherwise it's not required. Because this operation, after 12 months, if you want to sell the operation, it's not taken as a discontinued operation at the reporting date. Because it's falling in the next year, no? After the year end. It's not in the reporting date. So you just disclose it in the notes. Okay, it's a non-adjusting event. Fourth bullet point says, in the comparative figures, operations are also known as a discontinued, even though they were not classified as such at the end of the previous year. Definitely. At the end of the previous, see, you want comparative information, right? Comparative figures they give, the 2 years. You must have seen the statement of profit and loss and other comprehensive income. There, this year is a discontinued operation, but the previous year it was not. So how do you compare the figure? So what happens is, the operations in the previous year are also shown as discontinued operations. Okay, even though it is not classified that time, it is not classified as discontinued, but still you show it as discontinued operation. The reason is for you to compare. Okay. Now let us go through an example, the presentation, how it looks like. So this is a statement of profit and loss showing discontinued operation as a single amount with analysis in the notes. Okay, the analysis are given as the notes. So you can see for the 2 years, revenue, expenses, profit, finance, tax, income tax has been given, and then you have two things. One, after you deduct income tax from profit before tax, the amount is known as profit from continuing operations. Okay. After that, first, see, you have to follow this order. You just cannot go and write discontinued operations anywhere. Okay. First, you need to write profit from continuing operations only. Then only comes discontinued operations. Okay. Remember the order, please. First continue, then discontinue. Okay. And there's a loss from discontinued operations. If you see, there's a star next to it. It shows that there's a note given to it. How you got that 25 and 1. Okay. Then you deduct that loss from profits, and finally you get an overall loss in 2002 and profit. So from profit to loss. Okay. Now that note, that star below, let's see. So analysis of this loss would be given in a disclosure note. They didn't give here, but analysis usually is given in the disclosure note. Now let us go to the investor perspective. Investor perspective means conceptual framework. What conceptual framework talks about this? any standard you follow, okay, you should know what the conceptual framework talks about it. Okay, this is why the first lecture I started is with conceptual framework. It's very important that conceptual framework you learn. That is the first lecture, because everything is built around that conceptual framework only. You cannot go wrong with that. Okay, let us see what it has to say. So conceptual framework knows that the goals of the financial reporting is to provide information to current and potential investors, lenders, and other creditors that will enable them to make decisions about providing economic resources to an entity. We know this. Okay, the purpose of them is to provide information to the investor lender to make decisions. To make these decisions, they require information that will help them to assess an entity's future cash flows. This means that financial statements users are more concerned with future prospects than past profits. They will be able to make a better assessment of future profits if they are clearly informed about operations that have been discontinued during the period. So this is better because this is giving clarity. If you are putting like this, discontinued operations, going in line with the conceptual framework's principle. What is their principle? They want to provide information, quality information that enhances the user to take better decisions. So if you put that discontinued operation, okay, they know that from this operation they don't have any expectation of getting future cash flow. It is discontinued, so they know. Okay, they can make better decisions. Now test your understanding 2. Okay, where was test your understanding 1? Okay. This is a chapter, so we have other standards also along with this. I think this is chapter 3 in your textbook. If you go in your Kaplan textbook of SBR, this is chapter 3. In chapter 3, I think there are 4 standards which has been discussed. Other standards I have covered already. IAS 1, IFRS 8. So this is only left IFRS 5 from this. Okay, so test understanding 2, this will do at the end. Okay, so in this, they are requiring you to explain whether each of the subsidiaries means the definition of a discontinued as defined by IFRS 5. Okay, so we have to go through this and define. I think it's over. Let us check again. So, okay, it's so fast. That's nice. So with this, IS 8 I have already covered. Okay, go check out my videos because this is in a paragraph. You can see, right? It's in chapter 3. Because many standards are given in a chapter. Your textbooks are divided according to chapter wise, not standard wise. Okay, so most of you might be confused where it is. It is in chapter 3 of your textbook. Okay, even IS 34 I have done. Okay, so we are done with it. Now let us go to the chapter summary, right? So discontinued operations, 2 things under discontinued operation. One is the definition, how it will be discontinued or held for sale, and next one is the presentation. Okay, how you are going to present it. So with that we are over, and now finally we are going to the test your understanding 2 to say whether, okay, so I would say that rather take a picture of it, so I should not come back over and over again over the question when I'm discussing the answer. So please take a screenshot of this for the time being till I go to the answer. Okay, when I'm taking, so they are saying this is a group of company, they have the financial year end and they are authorized 3 months later the financial statements, and they are disposing many of its subsidiaries, each of which is a separate major line of business or a geographical area. Okay, so now you have to tell whether each of the subsidiaries, that means there are many subsidiaries, whether they meet the definition of discontinued operation according to IFRS 5 or not. Okay, so only so for this video we only have to solve test your understanding 2 and we are over. Wasn't it, short and sweet? Okay, let me take a picture of this so that I remember the questions. So I'm assuming that you have taken the picture of this. Okay, now let us go to the understanding for test your understanding 2. Okay, so it's very okay. The first one, there are 4 different paragraphs for 4 different subsidiaries. Okay, first one, a subsidiary England was sold on 1st Jan 2004. Can it be a discontinued operation? It is a discontinued operation. Okay, England has been sold in the year. It is a discontinued operation per IFRS 5. Okay, they are not explaining the details and all, but since it is sold within the year, see, it's very easy, the first one, because it is sold. Something which is already sold, there is no doubt. No criterion is to be made. It is sold during the year. If it is sold, discontinued operation. Second point about Switzerland. So on 1st Jan 2004, an announcement was made that there were advanced negotiations. I hope you have the question in front of you. Test your understanding too. I'm assuming that you have it in front of you. You should have it in front of you. because when I'm reading the questions, you will not understand from where I'm reading. Okay. 1st of January 2004, an announcement was made that there was an advanced negotiations to sell the subsidiary to Switzerland, and that's subject to regulatory approval. This was expected to be complete by 31st October 2004. Still, it is within 1 year. It is within 1 year. Okay. So, can this be a discontinued operation? Two things you need to look out. One is the intention to sell, one is whether it is probable within 12 months. Okay, so Switzerland is also a discontinued operation per IFRS 5. There is a clear intention to sell. Clear intention. You can see they have the intention to sell, and the sale is highly probable within 12 months. Within 12 months. If it's more than 12 months, then no. Now let us go to the France. The board has also decided to sell a subsidiary called France. Agents have been appointed to buy a suitable buyer, but none have yet emerged. You see? They are finding suitable buyer. Agent has been appointed to find the suitable buyer, but not yet emerged. The buyer they didn't get yet. The agents advises that potential buyers are deterred by the expected price that Portugal hopes to achieve. Looks like that it's not a discontinued operation. Let's see the answer. France is not a discontinued operation per IFRS 5. Why? It does not seem that France is being offered for sale at a reasonable price in relation to its current fair value. Number one. Number one reason is the price. The sale price is not reasonable with the fair value. That's the last line they told, right? That they are deterred by the expected price that Portugal hopes to achieve. The buyers are not coming by the price. The price is maybe too high. It's not reasonable. Okay, one thing, not reasonable. Second criteria, sale does not seem to be highly probable within 12 months. Does it look like? No, it does not look like. Because if you are not able to get buyer with the price, if you are not able to negotiate with the buyer with the price, then it is more unlikely that a sale will take place. Okay, so based on that, even though they didn't say the sale is probable or not probable, this you can say, looking at the other information, the sale does not seem to be highly probable within 12 months, therefore not discontinued operation. Now the last one. On 10 July 2004, an announcement was made that another subsidiary, Croatia, was for sale. It was sold on 10 September 2004. On 10th July, this announcement was made that they want to sell the subsidiary, but it was sold on 10 September 2004. Okay. And oh yeah, sorry, I forgot to mention the financial year end. The financial year end is 30th June 2004. Okay. But it was sold after that, after the financial year end. So it is not a discontinued operation. Why? Conditions for classification as held for sale were not met until after the year end. It was not met. So you cannot. Okay. So with this, I complete my IFRS 5. The next standard is small standard. Okay. The next standard is IFRS 7. Okay. Financial instrument disclosure. See, financial instrument, there are three separate standards based on financial instruments. One is the main financial instruments, all classification, recognition, all financial asset, financial liability, valuation, classification, all these things. The other one is just the presentation. Okay, and the other one is I think it is presentation. Sorry, disclosure. IFRS 7 is disclosure, and another standard, I forgot the number. I think it is IS 32, which is about presentation, only presentation. One is presentation, one is disclosure, one standard is the main IFRS 9. So three standard it has been dealt with, the financial instruments. Okay, so next standard is IFRS 7 and CV in IFRS 7. Till then, take care.